What's up guys, this is EveryJ and welcome to my channel. I hope you guys are having a nice day, making some cash throughout the week. On my previous video, on Sunday last week, I mentioned that this week will be very choppy. And it is really been choppiest week of the year. It went up really fast and it came down really fast day by day. And now that the date I have been saying to wait until to buy into dips is here, which is the March 19th, quad witching day, I wanted to discuss some levels to look at and things to consider going into potential recovery of the market, or maybe another flush. But before getting into them, I want to say that I am not an expert, nor understand the market like guys in the Wall Streets. I just like to look at charts and mostly in the charts, and this is how I've been playing this game for a long time. I experienced that the charts tell you what would happen before any news hits. And even though you get the news earlier than anyone else, we won't be able to understand the news and how it will affect the market fast enough to respond. Big institutions get the information way before it hits the media. So I choose to try to analyze the chart to understand and predict what to do to make money and pay my bills. So these will be my interpretation and how I will be playing through this very volatile market. And without further ado, let's get into some charts. Okay, first up is SPY. SPY have been performing quite nicely in my opinion, at least better than my expectations. And there is a diagonal support line drawn on the chart here. I drew this a couple weeks ago I believe, and today it has been bounced right off the level here. I think if it holds this level today, and mostly importantly on Monday, I can see a green light to buy your favorite stocks in S&P. And if the line is broken and stays below the level for more than 2 days, I'll be watching out for $380 to come. If it flushes below that, it will trigger a bear market to come retracing back down below $370, which I do not believe the bear market is here to come this year yet. Next up, QQQ. Here are some drawings on the chart again, which was drawn on our previous video 2 weeks ago when I analyzed the market, and right now it seems like the levels still are valid and well drawn in my opinion. I want to see a QQQ to protect $307 right here on Monday, and maybe until Wednesday next week to be confident for me to get into the market more stronger. But chart does not look great right now in my opinion, and I do hope to see some consolidation between the two levels here for momentum to pick up, for people to get confident enough to buy into the dips in these levels. The correctional levels were good, A, B, and C, just like so, which was almost evenly retraced with a level 8 from 0 to A to B to C. So let's see if the retracement is done and it consolidates here. If it does, I'll be picking up some shares today and on Monday, and I'll be taking some risk there. Let's look at some VIX. Many people like to check upon VIX while the market is on retracement, and recently it made lower lows as Powell made a very convincing statement this week about market recovering. This tells me that I can be more confident about the market despite all the worries of other investors. There aren't much news to consider from now on, from today, so I do expect it to have less of these like big peaks going up and having more consolidation from here on. Now let's look at some of the stocks that are in Dow Jones or value stocks. First up is JPM. Bank stocks were one of the few that were flying during the recent market crash, and now it is consolidating and might potentially come down for retracement. With the Fibit extension tool right here, you can see that it ran about 80% of the previous run during November to early January here. And if you consider that impulse wave 1, 2, 3 runs similar length, it is about time for these bank stocks to come down a bit at current level, or before $165 in this case, which might mean that the money that went into these value stocks or Dow Jones stocks might potentially come back into the tech stocks such as Apple or Tesla. And if that happens, Nasdaq might pick up its pace as well. This goes same for Goldman Sachs. Right here, I drew it here. And Bank of America, very similar. Also, this looks very similar on some of the travel stocks such as CCL maybe. Yep. And let's UAL here as well. These stocks look very, very similar in my opinion. And when some of these stocks are leveling and forming very similar pattern, usually this is when I start to take some actions, which is right now. And this was one of the main reasons why I was waiting for today, March 19th. Because it seemed like by the time it might form similar pattern for all of these different stocks. If you're not convinced yet, and you're more of a conservative player, stocks like McDonald's, Disney, or Johnson & Johnson might be a good choice. These are some overlooked value stocks that did not move much recently. Let's check McDonald's. McDonald's recently broke out of this bearish parallel channel, and it held its value despite the lockdown. And once lockdown is over on every state around the world, it will perform better in my opinion. And even during the lockdown, they have been renovating their locations for more premium feel for the customers, which tells me they're looking forward to move on with a better business plan. Disney is one of my favorite stock for long-term holdings. It has been running up a lot, as you can see here. Right now might not be the best time to buy in, but with any dip, I'll be adding more into my portfolio, of course. It recently finished its wave 1 through 5 and consolidating nicely here. It's not going too further down, and I hope to see it anywhere below maybe $187, $88 for a little dip buy, and hope to see another run. Next, J&J, Johnson & Johnson and other vaccine stocks were very bit down, but Johnson & Johnson held its value very nicely. And the level it held is nice for a good dip buy right now, actually. There's a drawing I drew back in December last year, I think, with a buy zone following this diagonal support line. This was a great buy, and it shows how the support lines can get you opportunities to make a lot of money. When you bought this on every time it touches near the diagonal support line and sell it when it go up, you probably made a lot of money. And then as soon as it breaks below the level and stays there for more than 2 days, that's when you sell. And these are very easy plays that you can do on every other stocks. Once you see this kind of a very strong diagonal support channel, you can play this on basically any stocks. Alright guys, that is all. And it will be very harsh to hold stocks while market is falling down. But one of the most important mindset that I have developed throughout my trading life is that you need to have a mindset to be a little bullish. Believing that the stock you bought is a great stock, and once the market picks up, it will rocket. Of course, if you bought some shitty company, you need to be a little worried. But if you believe in your stock, this kind of turbulence is nothing that you cannot stand. If you are trying to outsmart the market and getting out at the peak, buying at the lowest, you will get burnt and your account will not grow. Set a rule to take profit, stick to the rule, and I don't see any reason why anyone cannot make money in this current market. Thank you for watching, and if you liked the video, please subscribe, like this video as well, and see you next time. Bye bye.